Hi there everyone, and welcome to today's webinar on our launch of the SMSFY17 online course. Some of you may have recently attended our SMSF events right around Australia. So we visited Melbourne, Sydney, Brisbane, Adelaide and Perth, and went through many of the reforms that were in exposure draft at that time. And then right in the middle of those events, we saw the government then introduce the bills into Parliament. So what we have seen since that point in time is the government only last week now finalise the legislation in both houses of Parliament. So what we have decided to do, and again coming from feedback of many people who go to our day events, but also those that would like to go and can't go, is to be able to build out the course build out this event as an online course to enable you to either go through this in a guided format, and we'll go through that today in terms of the structure and approach that we would get you to take, so you can take our advice and step through this, or you can do it at your own time and at your own pace. And I guess today, again, is just to very much get you thinking about what these issues mean going forward for your clients, and share with you, I guess, a little sneak peek as to what you'll be able to access as part of this online course as well. So let's get stuck into it. So what we now have is certainty in respect to the superannuation reforms to take effect from the 1st of July 2017. Because on the 23rd of November this year, which is literally last week, we saw the Superannuation Treasury Laws Amendment, Fair and Sustainable Superannuation Bill 2016, now pass both houses of Parliament and is currently just awaiting royal assent. And you can see through these next couple of pages there are a substantial amount of change that is to occur from the 1st of July 2017, and most importantly, it's not just the change that occurs from July 17, but it's the activities that have to occur in the current financial year that are also going to be critical in respect to your self-managed super fund clients. So we know there's going to be the introduction of a $1.6 million transfer balance account cap that is going to restrict the level of tax exemption on fund earnings for those moving into retirement phase. We also know that there will be changes within the Tax Act and the Tax Administration Act to deal with defined benefit income streams, and in particular where individuals are receiving income streams that would be in breach of that transfer balance cap. And therefore we're seeing different tax treatment being introduced into the legislation to deal with those individuals who have incomes from defined benefits in excess of $100,000. We note that there are changes around the Division 293 tax. It was one area that the Labor government in its final last, cry out for change was looking to lower that threshold, but in essence Labor's support through this has seen the Division 293 threshold drop from $300,000 down to $250,000. Importantly, we're going to see a range of capital gains tax relief be introduced around individuals who are caught up by having to move from a post-retirement environment back into an accumulation environment. So we're talking about, say, existing pensioners who will have an amount above $1.6 million and will have to roll some of that money back to accumulation. It also applies to those in transition to retirement. There are some very important decisions around whether you wish to apply CGT relief, and that decision needs to be done on an asset-by-asset basis and needs to be made as an irrevocable election in the current financial year when lodging the 2017 tax return for the SMSF. So understanding whether the transitional CGT relief should or shouldn't be applied is something you need to absolutely give consideration to. We also know there's changes to the annual concessional contribution cap down from $30,000 to $25,000, and also that higher temporary cap will no longer exist. And we've seen probably the most controversial in the whole piece is the non-concessional cap. So no longer do we have our lifetime cap that was proposed on budget night, but a $100,000 cap, but at the same time introducing new criteria in to work out whether someone will be eligible to make non-concessional contributions. And as part of that initial step, it's going to determine how many years an individual may have a bring forward period for as well. So we cover in a lot of detail the impact of those contribution reforms and what it actually means. We also note the removal of the anti-detriment provisions, and in particular there are some very short transitional periods for a couple of years where people may look to claim that payment. We also see changes around with the concessional contributions, the fact that there's some amendments that need to be made to the maximum contribution base. We've also seen some what I call low-income quick wins, so some amendments to the introduction of a low-income super tax offset. We've seen some change to the way in which an individual will be able to claim personal super contributions going forward, in particular now through the removal of the 10% rule. There are certainly going to open up a whole range of opportunities in how you may structure contributions that an individual may make on a year-by-year basis. This concept of catch-up contributions, now note that it is the only piece of legislation that won't have a 1 July 2017 start date. It will have a start date from 1st of July 18. So whilst it has an additional period of time before it commences, there are certainly things that need to be considered right now if you have clients that are looking to utilise that legislation as and when it obviously presents itself. Some spouse contribution tax offset changes, in particular there just around some thresholds, and then we've got a couple of other interesting areas around segregation and this new concept of disregarded small fund assets as to whether you can actually apply the segregated tax method inside a superannuation fund, and more broadly we'll touch on what the requirements are for actuarial certificates going forward as well. And finally, there are a range of consequential and administrative amendments that also form part of this overall bill. So we do have in excess of 300 pages of explanatory memorandum, 140 pages that contain the actual bill itself with the legislative changes. We spent a significant amount of time working through the exposure drafts and in the consultation process, and then finally into bill form to put together our SMSFY17 one-day training events. And therefore the only natural thing to do from there was to then build this online to more broadly help you in your practice, and you and even your staff as need be, to go through and help disseminate this, because there is so much that needs to be done between now and 30 June. And most importantly, as we go through what these modules include, it's important to note that if you don't take a very structured approach to this for the year, you'll find that you're going to run out of time very, very quickly. So one of the things that I spoke about at our SMSFY events, and I just wanted to cover here, is to really paint the picture as to why the government is doing this and how it really dovetails into this key objective of what superannuation is about. Because when you bring these three pillars together, it does very much go to the core of what the objective of super is. And when I look at this objective, as I said at our SMSF Day events, that the objective I focus on is what the government is trying to remove. And this is removing the fact that superannuation is for retirement and not for estate planning. So with our contributions here, we're certainly limiting the tax concessions and the amounts that people can contribute, and in particular focusing on those who will be eligible and who won't be eligible. We then need to overlay that with the pension reforms and the fact that there's a capping of tax concessions for income derived in post-retirement, and we're now seeing that transfer balance cap come in at $1.6 million, which is going to influence the ability for someone to have an amount in pension phase versus accumulation phase. And whilst this anti-detriment payment here hasn't really necessarily got a large amount of exposure, I think it is very critical here, because with our larger SMSF clients, if they were rolling monies back to accumulation where they're in excess of $1.6 million, what would happen over time is that accumulation interest will be growing more and more and more in the taxable component. So a natural strategy there is to then look at building out a reserve or something similar to, in essence, claw back the contributions, concessional and taxable contributions throughout the journey, and then or use the formula within ATO ID 2010-5 to effectively claw back that taxable component. So that really neatens up that objective area quite nicely, and it's those three things when you look at them together as to why they've made these overall changes. So like I said, we've just recently ran our SMSF Day training events around the country and had about 120 odd people right around the country going through and exploring many of the issues. And what came out of these, which was very interesting, is that it's going to need a fundamental shift in the way you are doing and undertaking your work. And we'll cover this inside the course as well, because we're going to be including some interviews with CEOs of some of our sponsors at Class Super and BGL as well, talking about how the role of software and infrastructure is going to be going forward, because we've got new concepts of things like a total superannuation balance and the need to determine that at the immediate prior year before we can actually qualify to be able to make contributions into super, non-concessional contributions, whether we be eligible to use the catch-up concessional contributions, and those amounts having to be reported and assessed against a transfer balance cap. And the ATO have already started to give us some indications around the timing of when those amounts need to be done. And we're going to be moving to a more real-time reporting, not in the very sense of immediate, but within a few weeks type of reporting, rather than saying we are only going to have to do this after the end of the year each year in the SMSF annual return. So year one, there will be a bit of grace around that, but certainly it's going to have to, for many of us, think about how we're going to be doing work into the future. And that was very much the core message that we spoke about at these SMSF Day events. So let's get stuck into the course a little bit here, because what we have done is set this up in a way in which you can use our initial guided learning path, or whether you want to do this at your own pace. And we thought about the timing of this release, and it's probably not ideal as we lead right up to Christmas, but the reality is it also provides a great opportunity for you to get up to speed now, so that you come in with a very clear understanding of what you need to do in the final 6 months leading into 30 June. So our SMSFY17 course is fully mobile responsive. So you as a registered user and our members, which you'll be able to access through our campus platform, can access this at any time, whether it's from a PC, a laptop, a tablet or mobile device. Okay, so again, you can do this in a way that if you want to sit there and use the learnings at a time that suits you, certainly you can do so. We're putting in place a 3-week program for you to work through and really get you working through this and providing you with some live Q&As off the back of that as well. So in terms of this guided approach, what we're looking to do is launch week 1 of our SMSF online course next Monday, being the 5th of December. And in week 1, we're going to be releasing 2 of the 5 modules, and this will focus on the contribution reforms. So module 1 will talk about understanding the contribution reforms. We'll be going through all the reforms around concessional, non-concessional, Division 293, catch-up concessional contributions and more. Then we'll take you through to module 2, which will look at the opportunities with the contribution reform. So not only identifying the things that may change from the 1st of July 2017, but the things that you need to be focusing on before 30 June 2017 as well, because there are going to be opportunities in this year you'll need to explore and make the most of. Otherwise, the rules change from the 1st of July and you will have that lost opportunity. And not only do we need to think about this in the context of benefiting our client, but this sort of opportunity doesn't come around in our business that often either. Now, one of the most important things to help in this learning process is the ability to apply the learnings through some form of case study. So as we did on our SMSF Day events, we have included in the course, and in particular with this week 1, the case study on the contribution reforms. And you'll then basically be able to download that document as a PDF and work through those examples. Then when we get to week 2, we will be releasing modules 3 and 4 with the pension reforms. But you'll see just after that, so on the Tuesday that follows the launch, we'll be then running a live Q&A webinar where we'll be answering questions from the discussion forum within the learning management system, but we'll also be going through the case study answers. So that should say case study number 1 there, but we'll be picking up the case study answers and then providing them to you to help ensure that you've understood what those, what those learnings were from each of the topics inside that case study. So week 2 will then roll us into the pension reforms. Again, we're going to need to understand a range of new concepts and issues. So we'll be navigating through things like the transfer balance cap, where we have excess transfer balance amounts and what we need to do around the transfer balance determinations and what is a debit and a credit and why we might apply amounts out as a debit rather than as a pension payment or whatever the case may be, and what replenishment debits are and the like. Then in Module 4, we will be again exploring the opportunities, not only in respect to the current year, so right up to 30 June 2017, but then also what the impacts are from the 1st of July onwards. And again, to help assist in understanding what the impact of these measures are, we have developed a second case study there around those post-retirement reforms, which again will run a webinar in that final week, and will not only take on board the questions and discussion in that Q&A webinar, we will also go through in detail many of the, we'll go through those case study answers as well. So Joanne's asked here, will you be recording the webinars in case we can't do them live? Absolutely, we will be. So for those that can't attend those live webinars, shortly after, we will then make sure that they have been uploaded in and form part of the course as well. So that goes to, I guess, the choice you've got, whether you wish to do this in the structure in which we're putting here, so the guided approach, or whether you want to do this yourself. And then week 3, we'll put in place our final module in building your SMSF plan, and it's in here where we'll be going through some of the key building blocks that we see as being really important inside your practice to set yourself up to have what I'm saying is the best year you've ever had inside your SMSF business. And this is where not only will we have the content there for you, but we've included a range of bonus materials here, podcasts which we'll be incorporating, like I said before, with some of our event partners and talking about the impact of software and how software and the role that software will be playing going forward, and some checklists and worksheets that we're making available to, I guess, again, identify issues with your clients and start to take a more helicopter view in respect to what you need to address with your SMSF clients in the year ahead. So that's really a framework there. A question for some that might want to do this on a self-paced basis, there will be a restriction on the release of content. So as I said, next week will be the release of modules 1 and 2, week 2, modules 3 and 4, and then week 3, module 5. So if you wanted to work through all this in one go, you won't be able to do that until, in essence, we've then released that final week 3 of content. So just before I go to the accreditation, what I'm going to do here is just show you what we've actually set up here. So you can see here, once you would log in, you'll come to a student dashboard, and over the journey we're going to be adding more and more of our webinar content into here as well. But you can see once you've got your login information, you can then simply pick up and access the course. So this is a user login as opposed to an admin login, and what you can see here is me with the video. This is the initial welcome, which outlines what's being covered, and then obviously mapping out the way the course has been designed, CPD and the like. What will then happen is you'll go into each of the specific topics. Now, of course, with these at the moment, there is limitations because we're drip feeding this content out because we want you to focus on each of the specific topics so that we can guide you through each of those areas. But we'll have introduction in this topic. There'll be 2 or 3 webinars in there of content that you'll be able to work through, again at your own pace, but ultimately we want you to try and work through that in that specific week. Again, in here there will be webinars and content around the opportunities. The case studies will also sit in here, and the case study answers you can see as well are here, but they won't be made available to you until the actual live Q&A webinar as well. So all this information will be populated and sent out to you on a regular basis. When we get to week 2, that information will then be made available to you, and again will include, like it does here, an introductory video by me really setting up the information for the specific topic, what you need to be giving consideration to and the like. And then once we get through all of that, we then move into building your SMSF plan as well. So that's how the learning management system will ultimately work. If you have discussions as you're working through this, you can actually come in here and ask any question that you like, and basically that will send a question to us in the office, and we can then come back on here and answer some of that for you as well. So any of the questions that we get through here, we will also incorporate into the live Q&A as well, because there are obviously people that will be doing this that may not be tracking some of the questions and stuff, and they may want to know it, they just haven't realized the question. So we can ask that sort of stuff. You can see here a question that I did earlier: does the super reforms all start on the 1st of July 2017 except to catch-up contributions? Yes, it is, and away you go. So there's that approach, and then once you go through each of these topics, there will be a quiz that needs to be completed at the end of Module 2 and then also at the end of Module 4, and you need to answer correctly 80% of those 10 questions to evidence competency that you've actually understood and watched all that information. So once you've completed all of the 5 modules and having successfully completed the actual assessments in there, you will then be issued with your Cpd certificate, which, like I said before, comes with a range of accreditation from the SMSF Association, and so 7.5 points with the SMSF Association, 5.75 CPE hours for the Financial Planning Association, for the Tax Practitioners Board, and also with the major accounting bodies as well. So that provides you with obviously a significant amount of points there to be able to work through the topic. It will take you about 6 hours in total if you work through it in detail, obviously listening to the sessions. Arguably you want to spend some more time. We'll include some links and info to the explanatory memorandum and a whole lot more around that as well. Now, in terms of price, as of next Monday, the SMSF online course will be available for $397, including GST. I should note, for our existing gold and silver members with the SMSF Academy, you get access to this as part of your existing membership. For our bronze members, you will be required to pay for this, but there is a member rate. So we have updated now our smsfday.com.au website that allows you to order effectively from today. And what we're doing as part of this is that anyone who does register between now and when the course starts on Monday, you'll be able to access it for our member rate. So this is the rate that will also apply to our bronze members. So if you are interested in doing so, you can use the coupon code that you can see at the bottom there, early bird. Just make sure it is all in caps when you purchase it online, and you will then receive from us an initial welcome and some detail that map out how you'll be able to access the course and then from next Monday you will then start to receive other information in respect to the ongoing I guess release of content over the next couple of weeks. So that provides you with I guess a fantastic offer in terms of I guess taking advantage early of what we've got. It is, like I said, only available for this week. If you're interested in doing it and getting yourself underway, I believe the guided approach is certainly going to be something that is worthwhile considering because you'll get the advantage of asking us questions along the way, not only in the live Q&A but also regularly in that discussion process as well. So I guess now I'm happy just to take other questions. Like I said, I only wanted to take half an hour of your time today. So in that regard, the session, the online course covers a significant amount of content to really help you explore and understand and pull apart what these changes actually mean. So Carol has got here a question. Member has multiple pension accounts. What are the considerations as to which pensions to roll back to accumulation come 17? So yeah, in terms of, I guess there's a whole range of stuff that we need to consider here in terms of what pensions do we roll back, you know, what are the components of those pensions, and you also need to think about which, how many of those pensions do you want to keep. And in that regard, what I'm talking about is that there is a whole range of reporting requirements that are going to need to occur at the 30th of June 2017. And I said this at the SMSF days, if you've got 5 pensions running currently with different components in them and they all totaled $1.4 million, well, there would be a ongoing, or there'd be a reporting requirement to potentially report each of those pensions or all of those pensions into post-retirement from the 1st of July 2017. So there will be some very important things that need to be included in the 2017 SMSF return. It's going to be very big because we've got things like CGT relief to consider and include in there. We've got reporting for the first time in respect to existing income streams moving to retirement phase, and much, much more. So these are all the things that we break down in a lot of detail inside our course, and again, not only do we look at the understanding of the opportunity, but the understanding of the rules, but then the opportunity that actually sits within there as well. So it's those sort of things that are really important going forward to make sure that you have your head around them and what you should be doing, and that's why we put the case studies in there as well, to make sure that you understand how you go about doing it and get the right strategies in play for your clients going forward. So Tricia there, I'll make sure after this I'll send the recording of this out to everyone. If you want to feel free to watch it again, you can certainly do so. Frank, what occurs when a pension goes over 1.6? So again, we touch on that, but effectively there is a similar piece of legislation that applies to excess non-concessionals. So there's an obligation to have a notional earnings amount attributed to their account, and in essence they would end up with an excess transfer balance account determination and have to have amounts refunded back to the fund and then have a tax rate attributable to this. So Charmaine, thank you. I hope you enjoy looking at it and making the most of it. Ravinda asked here, how much is it to be a member? We've got different membership levels. So in terms of taking a look at the membership, what I will do is I will just put in a link next to your question there, and you can take a look at the different pricing. So obviously our SMSF Academy membership is tiered based on whether you want to access training, whether you want to access documentation. So what I should say there is that our SMSF document platform to do deed upgrades and pensions, it will be building all of the stuff that needs to occur between now and 30 June. We'll be building and implementing inside our membership platform for you to be able to prepare and provide for your SMSF clients. And you can leverage some of our key integrations with BGL Simple Fund 360, with Class Super and the like, to seamlessly execute on many of these changes as well. So, so Ravinda, hopefully if you have a look at the link there, that explains some of our pricing. We do actually have 14-day trials if that's something that you'd like to do as well. So take a look there and go on to some of the different pages to find out more details. And if you'd like a trial, you can certainly do something like that as well. Robin's got a question here. Is the TRIS completely being removed from legislation? Does this mean anyone in TRIS either has to satisfy the ABP or have a pension? In essence, what they're doing is we're looking at a new concept of what's called retirement phase. And retirement phase, in essence, means that the tax exemption, as we currently know, either a segregated or unsegregated method, will only qualify where a pension is in retirement phase. And what transition to retirement income streams are going to be are pensions that cannot go into retirement phase, so they're being specifically excluded. So TRIS income streams can continue, but they'll just be denied any exempt current pension income against them. And again, inside the session, inside this course, we'll explore when you might want to keep a TRIS and when you might not want to keep a TRIS. So certainly in terms of opportunities, there might be some things to be thinking about in the current year with TRISs around structuring those TRISs, whether you keep them going forward, but also some opportunities in particular when you think about some of the CGT relief provisions as well. So, and the last one here, Charmaine, will the course be available online for a period of time after we complete it? Great question. What we're going to do is everyone will have access to the course all the way through to 30 June 2017 as an absolute minimum. So if we make changes throughout that time, obviously you'll be able to access it throughout that time as well. So in that regard, you can go back and utilise it as much as you can. Something that has only dawned on me in the past probably couple of hours is there may be some people here that want to do this, obviously, not only to get up to speed, but the CPD as well. So if we look at the CPD points for an individual, some of you may need points for the SMSF Association or the FPA, whatever the case may be here. If you've got multiple people in the practice that need that CPD, maybe drop us an email and we can try and come up with some form of reduced price just for them to obviously obtain the necessary CPD around that as well. We haven't given that much thought yet. We wanted to get this course out and make sure people could start to use it at that period of time as well. So, and Mark's here, what can we as accountants advise clients, and does this course allow us to advise us on anything more? So this course certainly isn't providing any further information around RG146. So this has only been built for CPD. So anything that here that is obviously talked about that may require, for example, someone to commute an existing income stream back to accumulation because they've been in breach of their 1.6 cap. If that's a recommendation that's being made, obviously that is construed as financial advice and that individual would need to be licensed. So you will need to obviously explore differences between factual advice that would obviously be not requiring an AFSL versus whether there's a recommendation, and obviously there are also some very grey areas between whether that has been inferred advice or not inferred. So yes, absolutely you need to tread carefully, and in our Building Your SMSF Plan module, Module 5, we touch on that issue and making sure that not only do you need to give consideration to impacts of licensing, but how are you going to approach that issue and put in place the right building blocks to ensure that the experience of your client is one that is obviously going to be very, very fluid given the complexities that come around with this as well. So Carol asks here if a member has used the $1.6 million transfer cap and for some reason the pension ceased, can they still commence a new pension at a later stage? That's going to be dependent upon whether the amount has I guess been re-reported against as a debit against their transfer balance account. So it depends on the rationale as to why that pension has ceased, whether it's just lost in value, whether it's been a commutation, it's been a fraudulent activity. So again, these are, we cover off on what those things are and the potential for likely replenishment debits and the like. So there may be scope to do that. If they didn't pay the minimum, again, that could be a requirement where there'll be a debit that can actually come off that transfer balance account, and then because they wouldn't have an income stream for that year, they would then be able to report that again. A similar set of rules are being introduced as well in respect to individuals that don't comply with an excess transfer balance determination, where the pension will cease as a result of that. So yes, there are certainly opportunities to recommence those, but there's some reporting obligations that need to certainly line up as well. So hopefully that's given you plenty of, I guess, thinking and understanding of our SMSF course. Like I said, we have the opportunity for you to take advantage of the course at our discounted rate for the next few days anyway. So again, if you want to access that, you can purchase it online. You need to go to smsfday.com.au, and when you go to buy now, you need to make sure you include the coupon code EARLYBIRD. That is available until Sunday when the course starts. And if you do have any questions, any further questions around it, you can feel free to reach out to us at info@SMSFacademy.com.au, or you can give us a call on 1300 95 94 76. So it looks like we're all done, folks. So if there's no other questions, we might leave it at that. Like I said, we're just a little bit over half an hour, but it was really just to give you an understanding of what we've put in play now, and most importantly, to get you starting to think about the impact of these reforms. They are substantial. There are more clients that are going to be affected than aren't going to be affected in many things. So from that point of view, Tony, great question. Thank you for that, because I totally forgot to do it. So for those that attended the SMSF Live Days, regardless of your membership, you'll be provided with access to the webinar, or to the course. So those of you that attended our SMSF Days, you'll receive an automatic enrolment into the course. So, yep, I knew excellent with 3 exclamation marks. So that's fine. So thank you for reminding me, because like I said, I nearly forgot to mention that. So yes, so if you attended our SMSF Days, we will be providing you with the ability to access this as well. So I think that's about it. If anyone has any further questions, please speak now or forever hold your peace. But other than that, like I said, if you do have any other questions, you can feel free to get in contact with us, take advantage of the early bird, find out more from our smsfday.com.au website. And other than that, I wish you a pleasant rest of the day and look forward to you joining us at an event in the near future. Thank you. Cheers now.